Hi all. Today let us see about the results which has come in the last, last quarter. We are going to see about the last quarter results, especially about the one segment called QSR. So there are a lot of QSR companies which are listed in India, which includes Jubilant Foodworks, Sapphire, Devyani, and even restaurant chains includes specialty restaurants and restaurant brands Asia. The one common thing which we have noticed across the companies is they have got or they have reported a negative sales growth. So the main reason behind is something like, say, we call it as same store sales growth, SSG. That is also reported a very muted performance. So the reason being, number one, there are a lot of competition between the brands, and the second reason is regional brands have become more stronger. So this also ask or make us to ask the question whether the real moat is sustainable in this business or the moat is being destroyed by the competitors. If you look at 8 to 10 years history, these guys have been trading at a premium. Most of the guys have traded at something like, say, 50 to 60 times EV EBITDA and on an average. And the reason being they are scalable and high cash flow generating, and moreover it has got a moat because of the distribution and more about the consumer preferences. But today all this has been questioned, or all these parameters has to be questioned. Number one, today all these guys are present in the retail formats, and eventually all the retail rentals have shot up. And with respect to economies of scale or operating leverage, the rental is being shot up and the margins have come down. Number two, when these guys are present in the malls, not only they have to pay the rent, they have to pay the CAM expenses also, which we call it as common area maintenance. So this also adds up to the cost. Number three, with respect to the regional brands, how the regional brands have become stronger and stronger. Initially, the regional brands were learning the business. Now they also learned how to make this how to make this food very, tasty and according to the need of the consumer. Because consumer preference, consumer taste changes for every region, and these regional brands were able to capture those, and eventually they were able to serve the customer better. Hence, these guys have gotten a competitive edge over the national brands. And moreover, these guys, the national brands, all these are all franchisee models, and they have to pay the royalty fees to the national players, and this normally ranges from 3 to 8%. Whereas regional brands don't have this cost, and eventually this is becoming a second competitive advantage for the regional brand players. So literally they will be able to save 5 to 8% vis-a-vis the national brand players. So again, this has become a competitive edge. And the third thing being, previously 8 years before, the Swiggy, Zomato, the online players were not present this strong, and today their reach has been far and better. And using this edge, the regional players are able to serve the customer better, because initially these guys, the national brands, had the advantage of delivering the QSR or the food eateries to the consumer. Whereas today, using this the online channel, these guys were able to deliver it better. So these are all the advantages, which is more or less slowly killing the moat, we would say. And this moat has to be rebuilt by the national players. The question is at what cost? Whether they are going to forego the margins and then they are going to build the moat, or they are going to price it in such a way that they will be able to preserve their moat. So these are all the two broader thought process which is ongoing, and these national players, we have to wait and watch how these national players are going to respond. At the same time, there are other players who have responded better. This is not only with respect to, this kind of trend we are watching only in the QSR model, whereas the same kind of royalty, etc., the payments, etc., is being paid by even the beverage players. They have been able to do it better because they have been proving that we have a competitive moat, and then that is becoming stronger and stronger. So the QSR models have to be revalidated, and then these promoters have to rethink their strategy, how to gain the market share better. And with respect to regional brands, they are also learning the business curve every day, and then they are also opening up the chains. And since they know the regions much better, they were offering, the consumers offering were much better. And the unit economics today, normally, if they are not able to cross 2 times of gross, I mean, the asset turn is more than 2 times, then they will not be able to break even. And the same store sales growth, at least they have to be having a double digit, or the high single digit should be, at least should be validated for 2 through 3 years. So these are the main core parameters where national brands have to evaluate, and then they have to rebuild their strategy to exhibit this growth. And this is also reflecting in the valuation. One point in time, they used to trade at 60 to 65 times of EV/EBITDA. Now all these guys are trading at 25 to 30 times of EV/EBITDA. So in order to re-rate to the older levels, these strategies are becoming predominant, and we have to wait and watch on this space. And another space which is very interesting and is evolving much better and exhibiting much faster growth, we call it as FSR, fast snack chain. Fast snack chains or fast sweets and snack chains, where these guys are able to exhibit a very good growth, which includes Haldiram's, Balaji Wafers, I mean, like even to an extent Bikanerwala. So these guys are exhibiting good growth. So we have to look at these models also. And maybe the national brands, the QSR models, if there is anything to be, re-strategized, these brands, they can learn it from these brands, and then they can adopt this strategy to re-rate it better for the future. And the investor can also look for the same to gain from these stocks or from this entire sector. Thank you.